And now the inventory. Inventory are our merchandises or our stocks that company didn't sell. It will sell to the customers later. We make a goods, for example, during this year, we make 10,000 units, 8,000 units sold, 2,000 units left. That is our inventory. Now the prepaid expense. If you don't understand the prepaid expense right here, don't worry about that. We have a complete, explanation on our coming lectures about prepaid expenses. But let me explain it. Prepaid expenses are, pay close attention to the word prepaid, that you have paid in advance. Since these are the expenses, so all the expenses that you paid in advance, for example, the mobile recharge, right? You paid in advance. The Wi-Fi services you paid in advance. The rent, for example, you paid the factory rent advance, 6 months rent or 1 year rent in advance, right? But prepaid expenses, they are our assets. These are not the expenses that are consumed. These are the expenses that are yet to consume. After time to time, right? For example, right now, it's January, and the rent of each month is 1,000. And what happened? We paid 3,000 in January. That's just for information. So 1,000 would be your expenses that could go to income statement as an expense, and 2,000, because that expense is not occurred yet, but we prepaid or we paid in advance. So that 2,000 will go to balance sheet as current asset. When we make February accounting equation or statement of balance sheet, then in February, 1,000 will go to expense and 1,000 will left for March will go to current assets. So any kind of expenses that we didn't consume yet, but we paid in advance, for example, whitewash contract or cleaning contract, right? We paid in advance. Or employee salaries. Once, employee said, I have, a marriage ceremony, I want to have advance salary of 3 months, right? You gave them the 3 month salary, but the services you didn't receive, so that will become your asset. That is your resource, right? So current assets whose life is less than 1 year or equal to 1 year, they are cash and cash equivalents, short-term investments, account receivable or not receivable, inventory, and prepaid expenses. Everything clear? Or any question? Okay, let's move. Long-term assets. The other name is called fixed assets.
Do we have to know, do you have to like memorize what makes up short-term and like long-term assets?
These?
Yeah, do you have to memorize that or should we just understand it?
You understand that, but when the question comes, you can easily segregate with them. Don't worry about that. It looks like that you have to memorize, but as the time passes, when you read the question, you can easily recall that, okay, this belongs to cash, this belongs to account receivable, this belongs to inventory, this belongs to prepaid expense.
Okay, so if you're gonna ask us, it's gonna be like a matching thing, right?
Yeah, you're right.
Okay.
So you don't worry about memorizing by heart right now, just to understand each head, right? We call that head, accounting head or account title head or whatsoever, right? So just go through with that one, but as the time progresses and we do some kind of examples, it would be very clear for you that, okay, this item belongs to this one, this item belongs to this title. It would be very easy for you. Okay, now long-term assets. So long-term assets, as its name implies, those life for more than 1 year, simply. If life is more than 1 year or 12 months, it means we're talking about long-term assets. Expected to benefit the company for longer period of time. That is its bookish example, definition. So long-term assets include property and equipment. For example, AC, computer, right? Plant, property is your land, right? So these are tangible assets, which include land, building, computers, equipments, right? And of course, its life is greater than 1 year. Of course, its life is greater than 1 year. Life greater than 1 year, right? Accumulated depreciation. We call this contra account, which means opposite account of equipment, land, this kind of stuff. What is depreciation? Depreciation is it's a annual or monthly wear and tear of the assets, right? Which kind of assets? Fixed assets or long-term assets. For example, you bought a computer, you use it for 1 year, its value decreases, right? Your mobile phones, its value decreases, or vehicles, cars, trucks, when you use them, its value decreases. So value decrease, we call that depreciation. We have different, we have complete chapter of how we calculate the depreciation, but look at that accumulated. What do we mean by accumulated? Year by year. How much is the year by year depreciation accumulated? Year by year summed, right? For example, every year the computer loses its value of 1,000 yuan, right? For 1 year, depreciation would be 1,000. For 2 years, for year 2, it will become 2,000 because this is accumulated. If 1 year depreciation is also 1,000, second year depreciation is also 1,000. When you accumulate them, so total become 2,000. And why I wrote it down a contra account? Because this asset is always written in terms of minus. It's not an, for example, assets are we have land plus computers. When you talk about accumulated depreciation, we always write it down minus accumulated depreciation because this is a negative account or contra account of the long-term assets, right?
So it doesn't actually benefit the company as it says in the description.
It doesn't tell you the benefit. The reason is why we create it, right? The question occurred. If it doesn't benefit to the company, then why we create it? Because it tells us what's going on with the company's assets, right? If you don't understand this concept right now here, don't worry about that. We'll talk about time to time because we're going to have a number of questions, a number of concepts to clear, and in those concepts we'll talk about accumulated depreciation time to time. So right now, how it will benefit the company, it will tell you what's going on with the company's assets. Let me give you a very small basic example.
Sir, I'm sorry, can you go back to the slide once again? Like I have a question. I'm sorry.
Which one?
No, the one after. Yeah. For the property and equipment, from my perspective, I think it is regarded as short-term assets because, for the properties like which is the house and like equipments or accumulated depreciation like which is the phones and the car, I think it could be sold like within 1 year, and I am a little bit confused why is it regarded as long-term assets.
It can be sold, but remember, their life with the business is for more than 1 year. Okay, for example, okay, let's clear this one. This is a very logical question as well. Let's talk about this one and then we'll talk about the accumulated depreciation stuff. Okay, you started a business. You buy a building, which is your property, and also land, right? The question is, you can sell those building or land. Answer is yes, but then your business will also going to be finished. You bought that building and land and filled it with furniture. For more than 1 year or less than 1 year? Definitely for more than 1 year, right? Because you want to start a business and you want to run that business for numerous years. Similarly, you want to expand the business, you bought trucks and cars. You can sell them in less than 1 year, yes. But look at your intentions. You gave car to your executives in order to sell them less than 1 year. If it is less than 1 year, then it's not a fixed asset. But look at your intention. You bought them a cars for more than a year, maybe 2